move on and finish up with Adcock Ingram, which of course is South Africa's second largest drug maker after Aspen, but it's got quite a significant portfolio of healthcare and nutraceutical products. It bought its way into that area, and it has an enormous portfolio of things like Panado, Adcodol, Miprodol and drugs like that, which are really, almost over the counter and very, very widely used. Market capitalization, 8.5 billion rand. Price to earnings ratio, 27.48. Dividend yield of 2.07%. In the last 5 years, though, it had all that drama with a potential takeover. Bidvest was bidding for them. There was the CFR company from Chile. Then they went away. And it's almost as though Bidvest, having won, kind of ended up thinking, what the hell did we do here? Because they bought it for 70 rand and it's still trading at 45.
Yeah, I mean, it's been very, very quiet for Adcock Ingram. Nothing really happening. They've been steadily kind of growing their
lots of
earnings
re-engineering internally.
But yes, they've been trying to get their internal structures right, because a big issue that this company had, and one of the big reasons why CFR wanted to get involved, was the fact that they'd built these state-of-the-art manufacturing facilities all over South Africa, but they were only being utilized 40-50%, which means that your costs are a lot higher than they really should be. You're not benefiting from economies of scale, and this is something that this management team had to fix.
But they fixed it how? By finding other people to manufacture for, or just simply by right sizing? Because the new manufacturing facility you're talking about is in Clayville in Joburg. And as you say, tremendous, but it can't be helped if you're not. So they must have consolidated perhaps and shut down some other manufacturing facilities or something.
Yeah, I'm unsure what exactly they did, but they have been improving margins.
Plus they just announced to get out of India. They had the previous management team had bought their way into India, so they sold that business to an Indian company of some sort. They're going to realize about 370 million rand, draw a line under it, get cracking, refocus.
Maybe use that cash to just do a couple of small acquisitions in that OTC space. And
as far as Bidvest is concerned, they don't appear to be likely to make an offer to minorities, but it doesn't matter. There's now Andrew Hall, the CEO, who's been in the business a long time, is now to the fore, and the market has started to recover. I see it's picked up to about 48 rand a share. It's starting to look a little bit better.
Yeah, I mean, we've always said that this is a recovery play, and it's an interesting story from a long-term perspective, because the expectation is that they will be able to get it right eventually. The issue is an opportunity cost issue. How long is it actually going to take these guys to fully turn around that business? Because there's still a lot of excess capacity.
Because you're right, that does distress people. If you get in because it's like a recovery situation, but then the next set of results are weak and the ones after that are weak, then people lose interest.
Yeah.
So, okay, but hot or not?
Yeah, I would have to wait a little bit, so I'll be not for now.
Okay, I'm warmish on it, so I think I'm going to go hot, just because I think there is an opportunity there, even if one wouldn't buy them necessarily in the hot stocks portfolio. Speaking